Hello and welcome to the Lodestar podcast News in Brief, where we are going to be rounding up all the major points of last week's supply chain news. We have been on a brief 2-week break, but we are now back and ready to deliver all of the main highlights of the news. And in this episode, we will be discussing the supply chain impacts of the recent news of the 2-week ceasefire between the US and Iran, plus a look at how the airfreight market has responded, and of course, a look at the latest freight rate developments. Later in the episode, I will be joined by Aevean's head of consulting, Maarten Wormer. But currently, I am joined by a returning staple of the Lodestar News in Brief podcast, Gavin van Marle. Hello, Gav.
Hello, Charlotte. Nice to be back.
It's great to have you back. And obviously, the big news from last week that we must discuss is the positive news of the ceasefire between the US and Iran. This is 2 weeks, and it includes the de facto opening of the Strait of Hormuz. This was announced, I should just say, because it's probably going to change by the time this episode is out, but this was announced yesterday, which was Wednesday, the 8th of April. We are currently recording on Thursday, the 9th of April, and talks between the US and Iran are supposed to take place this coming weekend. So, Gav, what is the situation looking like? Is this having any impact on shipping at the moment, or is it simply too early to tell?
I think you probably answered that almost yourself, Charlotte. I mean, you're right. The base case that we're working at is that everything's probably going to change by the time this podcast is released, and probably, in fact, by the time we've actually finished recording it today, right?
Probably.
Yeah. But I mean, that said, there's been a trickle of bulkers and tankers which have passed through Hormuz since the supposed ceasefire, to add to the trickle beforehand, which were mostly sort of Iranian vessels. Apart from, of course, the CMA CGM Kribi, which managed to sneak out last weekend, reportedly by sort of hugging the Omani coastline. Um, I mean, I think, as far as the wider container sector goes, Charlotte, there haven't been any real changes on the wave, so to speak, and there's good reason for it because, as you said, it's still early days. And since most of the carriers have sort of begun to reaccept bookings to the Gulf, but via the sort of Gulf bypass ports such as Jeddah and Corfracan and Salalah, they'll probably concentrate most on those until the Hormuz situation really sort of calms down. The quote that I have selected that really sums it up, I think, is from Zenita's head analyst Peter Sand, who said the conflict has displaced 250,000 TEU of weekly container shipping capacity, and carriers have put a lot of effort and expense into establishing alternative routings to allow goods to flow into the region. You don't suddenly toss that out of the window because there's a 2-week ceasefire. So, end quote. And according to Zenita data, weekly capacity into Jeddah and King Abdullah Port, those are the two big Saudi facilities on the Red Sea coast, has increased 19% as carriers introduce new services into what the Gulf land bridge. So, there's been a lot of time and effort put into that to continue these goods going into the Gulf populations. We've talked about that on previous podcasts. And so in any case, my assumption is that when container shipping lines feel that it is safe to send their ships through the strait, that it'll actually be the priority would be getting the ones that are currently stuck there out, because I think those crews really need to come out of the region.
Yeah, it sounds like it's quite a similar situation to what we had with the Cape of Good Hope reroutings, where, I mean, carriers have found these alternatives, they've bedded them in, and we've seen that if they've tried to go back through the Red Sea and the Suez Canal, that it's completely backfired. So, yeah, I think we probably will see what we're seeing at the moment for quite a while. But obviously, this is a positive step. For one shipping line, though, it's been quite devastating. So, what are the details here?
Yeah, so this is a story on Singapore headquartered Sea Lead Shipping. So Sea Lead, they launched operations in late 2018. They then saw, very fortuitous, because they then saw tremendous growth during the pandemic, with what we called at the time sort of opportunistic niche services, which set up all over the place to scoop up demand that couldn't find space on the main deep sea carriers vessels. And as the pandemic came to an end, it sort of switched its focus to the fast-growing Asia Middle East trade. So you can probably see where this is going. However, there is one further sort of twist in the tale, and that is mid last year, 16 of its chartered vessels were accused of sort of sanction busting activity in regards to Iran, by the US. The company returned all its vessels to, or returned all of those vessels to their owners, but it still has a Department of Justice case hanging over it. And meanwhile, its operating capacity, and this was sort of noted by Line Analytica last week, has fallen from a high of 208,000 TEU shortly before it redelivered those 16 vessels in the middle of 2025 to 62,000 TEU capacity today, which is across just 14 ships. So it's quite a it's quite a reversal in fortunes, frankly.
Yeah, that is quite a drop. It's interesting. I was reading a report by market consultant Braemar earlier this week, and they said that there are market rumors that Sealead is actually going to cease operations. I mean, they didn't name Sealead; they said one shipping line, but I think we deduced from the
Yeah,
clip
we
that they
did.
were talking about Sealead. And they kind of suggested that if this were to happen, then all the ships that it currently operates are going to have to seek re-employment, which will be great for carriers because, like the other carriers in the market, because we've seen so far this year that despite all the volatility, carriers are still trying to snap up second-hand capacity, but it's been quite slim pickings. I mean, there's only so much second-hand capacity to go around. So if Sealead does cease operations, then yeah, we might see lots more moves on the second-hand container market.
Probably have to have a quick sort of look at the ownership structures of those. Are those vessels owned, did they say? Are they Sea Lead
I
owned?
believe so. I think they said that they did say that there's already some rumors that they have found re-employment on some of them,
Right.
but yeah,
Right.
rumors,
Very
rumors.
interesting. Yeah, it's a very constrained
Yeah,
market. Any extra tonnage will be much welcomed by the other carriers, I should think.
exactly. Something we'll definitely be
Mm,
watching.
yeah, yeah.
And now to take a look at the current state of the air freight market, I am joined by Aevean's Head of Consulting, Maarten Wormer. Martin, thank you so much for joining me on the podcast today. It's great to have you here.
Yeah, hi Charlotte. It's indeed great to be here. So appreciate the invitation indeed.
Thank you very much. And I know that it has recently just happened. The news has just broken
Yeah.
a few days ago, and it's still very, very uncertain. So it's quite mean of me to ask you. But do you have any indication of the impact of the 2 week ceasefire on the air freight market? Can we expect any normalization anytime soon?
Yeah, that's hey, you're indeed being tough with a $1 billion question indeed. But no, I think it's hey, it's going to be super interesting to watch the sort of the air freight market over the coming weeks and months. But indeed, I think hey, to also answer that question, let's also look back at sort of what has happened since the conflict started, because effectively we've now lost for the past 5.5, almost 6 weeks. We've lost have almost 6 percentage points of expected air freight growth every week globally, right? So that means that for the full year, we would now be looking at sort of a 1 percentage point decline in global capacity growth, right? Remember that at the start of the year, we were expecting 5-6% growth. So we've lost now 1 percentage point of that. So that's already a big impact. And then indeed, yeah, what might this ceasefire do? In my view, I think normalization is still very very far away for many different reasons, and obviously fuel is one of the large driving forces there. With indeed shortages being reported in different parts around the world, and it will simply take time before that is being restocked. Even if the Strait of Hormuz opens, I recently looked at the tanker sailing to Rotterdam. It takes 39-40 days to get there, right? So it'll simply take a long time before those volumes are reaching the destinations. So that'll keep fuel prices extremely elevated. I think now in Asia it's about 160% higher than it was last year. So that is obviously making big impacts on networks, on carriers, etc. So before that normalizes, I think that'll take time, way more than the 2 weeks ceasefire.
Yeah, definitely. I mean, everything is so uncertain, and that's been
Yeah,
a theme throughout the whole of the year. So, I can't imagine that would change anytime soon.
yeah.
Now, aside from the conflict in the Middle East, are you seeing any kind of regular seasonality patterns? I mean, are there any lanes or verticals that are showing as particularly strong, or is
Yeah.
everything just completely skewed by this external volatility that we've been seeing?
Yeah, it's a mix of both, obviously. But hey, maybe starting with sort of the indeed the skewed piece, right? So hey, Asia Europe is obviously heavily disrupted because of the lack of capacity to the Gulf. There's more indirect flying now, so people are changing their tech stops along the way to Europe. There is, like I said, more direct flying in itself between Asia and Europe, which also means very long flights, right? Because a lot of airspace on the way is actually closed. So that impacts payloads. It also impacts fuel usage, which is amplified by the fuel rates, right? So from a capacity perspective, that is really obviously the big lane or the big corridor where we do see a lot of changes. In terms of the other sort of regional trade lanes, um, yeah, it's in line with what we saw last year. So there's not too much difference there. There are, however, three verticals I would like to point out. So, and those three are effectively the perishable goods, the e-commerce business, and the data center related goods. And I want to highlight those three for basically different reasons, right? So, hey, with the high fuel prices, perishables are definitely most exposed because of their relatively low value density, right? The low dollar value per kilo of perishables. So, hey, that I know that vertical is really very much under stress of those increased fuel prices. So, expect an impact on volumes there. Um, hey, from an e-commerce perspective, e-commerce. Hey, looking back at last year, it grew 16% in terms of volumes. For the first 2 months of this year, it actually followed that trajectory almost the same at 13% growth. But a big underlying driver there is that the value density of e-commerce has been going down, right? So um, the sort of the growth in weight is indeed driving it, but not so much the growth in value. So what that means is that lower value density also potentially makes that vertical relatively more susceptible to the higher fuel rates. So it's interesting to monitor and to watch that space to understand what will happen. If these fuel rates continue to be elevated for longer. And then thirdly, from a data center related goods perspective, that vertical was already the driving force or one of the two driving forces last year in terms of volume growth. And also because their high value of the goods, expect that to also definitely continue for the time being, even despite, I would say, the high fuel prices. So those were the three verticals that I think are indeed important to watch because of their size and also their difference in how they might be susceptible to the current situation.
Yeah, I think the e-commerce one is particularly interesting
Yeah,
because obviously there's that change in de minimis regulation
yeah,
in
as
Europe
well.
that's coming up later in summer. So yeah, that's obviously going to make it more expensive. So that will definitely be an interesting vertical to watch for the rest of the year. Maarten, thank you so much for joining me on the podcast today. I really, really appreciate your time.
Yeah, perfect. Thank you, Charlotte.
So, Gav, with all of this in mind, what is the latest with the ocean freight rates? I know that over the past few weeks, obviously, we haven't been recording the podcast,
Yeah.
but we've had various articles about shippers complaining about multiple war risk surcharges that weren't transparent. I mean, they had no idea exactly what they were being charged for. And also, we've seen carriers kind of stacking bunker fuel surcharges that are supposed to be included on index-linked contracts. I think that's the very nature of them, that all the surcharges are built into the cost, but then some carriers were kind of putting these over the top of index-linked contracts. So a lot of perhaps shifty business going on with surcharges, which obviously meant that freight rates were very high. What is the current situation? I assume that the latest rate data won't have registered the ceasefire. So
No.
what are we seeing at the moment?
Yeah, it's a kind of murky picture. Just on your thing there about the surcharges, they shouldn't be added to index-linked contracts. That's absolutely true, but they can be added to fixed rate contracts. When
Yeah.
it's that's just to sort of clarify that. And they were, and you're right though that they were being added to index-linked contracts already in certain cases, because we know we had some legal a lawyer confirming that he'd had cases of that pass across his desk. So anyway, back to spot rates. Um, I'm still of the view that actually the closure of Hormuz doesn't really matter as far as, and I mean, it does matter, and the whole thing in Iran matters gravely, but it doesn't really matter as far as the main deep sea trades, the Trans-Pacific, the Asia. It doesn't really matter. It could go apart from the fuel cost issues, and that's, well, obviously that's going to have an effect on fuel prices when you take out 20 to 30% of global supply. But anyway, as far as the rates go, as far as the actual rates go, it really, it's quite irrelevant. Here's the evidence to prove it. I mean, jury's World Container Index is just out as we speak. Rates were down to North Europe and the Med by 9% and 3% respectively compared to the week before. While on Trans-Pacific, they're up 9% to LA and 7% to New York, right? Okay, so that's quite a different movement on those two big trades. Now, according to one of our sources on the US West Coast, um, these increases were largely driven by the implementation of new fuel surcharges. And the timing works on this if you sort of calculate it, because it's been just over a month since the conflict began and Hormuz closed. The FMC still requires 30 days notice of new surcharges, and that ignoring carrier pleas. I mean, carriers have spent March going to the FMC and asking that 30-day notice period to be reduced to 2 weeks. But that was turned down. So these fuel surcharges, the emergency fuel surcharges, were eventually applied this week, right? And that's why the Trans-Pacific WCI is up, but the Asia Europe one is down. And to further underline this, because the Asia Europe one's been already applied, yeah, and to further underline this, look at the WCI's Rotterdam New York route, right, this week. Okay, now this is the famously stable transatlantic trade where rates barely budge an inch, and yet this week we've seen the spot rate jump 25% against previous week to bring it up, nearly up to $2,000 per 40 foot. So, and that is a movement almost unheard of. Now, Drury's analysis claims that capacity on the route has been reduced by 13% against last month. But I would also argue that as it's an FMC controlled or FMC regulated trade, that the new fuel surcharges also played their part in the increase that we've seen there this week. So, to conclude, right, spot rates, as in just the rate for the freight, is actually still in a weak place, but freight costs, thanks to the war, are on the rise.
Right. Okay. So now that there's this ceasefire, I can we expect to see these costs going down soon? Probably not, right?
Well, this will be the thing. So it'll be interesting to see how quickly carrier, if the fuel prices come down quite quickly, and you know, I don't know. I don't know enough about fuel to know whether that's the case or not, and how quickly it takes to get refineries back up and so on and so forth. But if they came back, you would expect on the more dynamic trades that the fuel surcharges would be reduced, but a lot of the carriers review their BAFs on a quarterly basis. And I wouldn't be in the least bit surprised to find that, BAF levels that reflect today's elevated fuel prices remain in place for a number of weeks after the conflict finishes and the prices come down, because carriers will be saying, yeah, no, don't worry, we'll be, we review our BAF levels quarterly, and we'll be doing so when the next quarter arrives. Call me a cynic.
Well, I look forward to the next earnings reports. I'm sure it'd be quite
Yeah.
interesting to tune into some of the calls and hear the Q&A.
I mean, there's no doubt that the carriers' costs have gone up massively, haven't they? I think Hapag-Lloyd's CEO Rolf Haben Janssen was talking about an extra $50 million that have been added or basically taken away from its balance sheet as a result of this. So, they will have to recoup these higher prices. It's just a question of how long they recoup them for, I think, is
Yeah. Well,
whether
we
it's
will
a
have
case
to
of
wait and
recouping
see.
or just cooping.
Just cooping. Finally, Gav, could
Yes.
you give us a recap of what has been on the Lodestar Premium this week, please?
Sure. Well, obviously, truncated week because it's the first week back after Easter, and the Lodestar, we have a bank holiday in the UK on Mondays. But it's been another cracking week. So we had a fantastic double-header analysis of the Hutchison versus Maersk case in Panama and why it doesn't seem to be extending to MSC. We had a behind-the-scenes look at why Russia is contemplating banning all foreign carriers from its container trades. There's a guest column from the WiseTech CEO, Zubin Apu, and a deep dive into the Amazon versus US Postal Service versus UPS package delivery scene in the United States. So it's great stuff.
Deep dive.
Deep dive. It's a big one.
Gonna have to go and read that.
It's a long read. Make yourself a cup of tea and a couple of slices of toast and snuggle down to read about Amazon versus the United States Postal Service.
That sounds like a brilliant evening. Well, on that note, I'm off to go and put the toaster on. So I will speak to you next episode, Gav. Thank you so much for joining me. It's been wonderful to have you.
You're so welcome, Charlotte. Thanks very much.
So that is all we have time for on this episode. Thank you so much for joining me today. And of course, thank you to my guests, Maarten and Gavin. I really hope to see you next week at thelodestar.com. Thank you for joining me.